Hello and welcome to another update video about FETCH.AI. Let's take a look at the FETCH chart, and the micro patterns are, as I mentioned in previous videos, pretty difficult to read. I mean, we can recognize a structure, but it is just nothing very clear. The problem is there are many ways how I can interpret this price action here, this micro price action. Overall, looking at the bigger picture, the idea is still that a third wave topped here in March this year at 341. Again, I mentioned it before, that third wave ideally should have pushed higher. I expected another high, just because it's typically the most likely scenario to get a third wave at least to the 138% extension. That would have been $4.80 or higher. Now, if it didn't, well, it didn't get there, but the problem is if a third wave doesn't get there, the chart turns questionable. That's all I can say. It's questionable. It's not a great chart anymore, not with a very short third wave. Does it mean we have to be bearish? Not necessarily, not as long as we're holding above support, which is at 52 cents, but that's far away. It just means we need to be on the side of caution and maybe shouldn't expect massive strength until the market gives us a reason to do so. At the moment, it's possible that with that latest dip, the market extended a fourth wave. So this fourth wave might indeed have bottomed, but then I would need to see some evidence for that we get a bit of upside momentum, or at least a 1-2 setup or something. So the support is still at $1.08, 75 cents or 52 cents. So one scenario would be that this fourth wave has bottomed, but it will take a while before we can really find out, because if we rally from here, it could also be the yellow scenario in which we're moving up in a B wave. And there is the potential for a normal B wave. Okay, so that this is just forming an ABC structure. And then we form a B wave here. So basically, let me label that B. Now, the B wave could top here, because you have a three-wave rally, a three-wave move down, but it did overshoot to the downside, which actually indicates weakness, which indicates that this C wave here might not even move above the A wave high that formed at $1.76. But in a more extended move up, it's possible that this ABC will only be a larger A wave, then we get another B wave, and then a C wave rally, which could form a high B wave. But you can see already the problem here. This could lead to some extended sideways action before we actually move a little bit higher. So that means at the moment I'm watching if we can get at least a C wave rally here. And then we just have to see if afterwards a higher low holds in circle wave B. Then we get a C wave up, possibly to 274 or $3.08, maybe even higher. But that high B wave has become less likely due to the overshooting B wave to the downside, because there's no reason to expect a high B wave if the move to the downside did overshoot, okay? Because that's bearish, and a high B wave is bullish, potentially. So yeah, not great. So as you can see, there are many ways how this can be interpreted. However, the levels haven't changed. They're still the same, $1.08, 75 cents, 52 cents. And to the upside, I mean, if that C wave unfolds to the upside, what would be the 100% extension? So we take the length of the A wave, we go to the low of the B wave, and then this here would be the, let's say, the target zone, the initial target zone for that C wave rally to $1.67 to $2 basically. Yeah, that's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.